Introduction: the king of mobile. In the history of business, no collapse was as shocking as Nokia's. In 2007, Nokia wasn't just a company, it was the king of the mobile world. With over 40% market share and a valuation exceeding $100 billion, it seemed invincible. But in just a few years, this empire would vanish. This is the financial autopsy of a global giant. Chapter 1: The Golden Era. To understand the fall, we must look at the peak. In the late 90s and early 2000s, Nokia was the symbol of innovation. From the legendary 3310 to the high-end N series, Nokia defined what a mobile phone should be. Their profit margins were massive, and their supply chain was the most efficient in the world. They were the masters of hardware. Chapter 2: The Day the World Changed. January 9th, 2007. Steve Jobs stands on a stage and reveals the iPhone. At Nokia's headquarters in Finland, executives laughed. They called it a toy with a poor battery and no physical keyboard. This was their first and biggest financial mistake: arrogance. They focused on building phones, while Apple was building pocket computers. Chapter 3: The Software Trap. As Google launched Android, Nokia clung to its outdated operating system, Symbian. Symbian was built for an older era. It was slow, buggy, and hated by developers. While Apple and Google created app stores that generated billions in revenue, Nokia was stuck in a bureaucratic nightmare, trying to fix a dying system. Chapter 4: The Burning Platform. By 2011, the internal situation was desperate. The new CEO, Stephen Elop, sent his famous burning platform memo. He realized Nokia was standing on a burning oil rig. He made a massive bet, ditching Symbian and partnering with Microsoft for Windows Phone. It was a $7 billion gamble that failed to win over consumers. Chapter 5: The Financial Bleeding. The financial numbers during this period were terrifying. Nokia's market value plummeted by 90%. They were losing billions of dollars every quarter. Factories were closing, and thousands of engineers were laid off. The company that once drove Finland's economy was now fighting for its life. Chapter 6: The Final Acquisition. In 2013, the end finally came. Microsoft purchased Nokia's mobile phone business for a mere $7.2 billion. A company that was once worth over $100 billion was sold for a fraction of its peak value. During the press conference, Nokia's CEO famously said, "We didn't do anything wrong, but somehow, we lost." Conclusion: Lessons for the future. The fall of Nokia is a warning to every business leader and investor. It proves that in the world of technology and finance, if you don't innovate, you evaporate. Past success is a trap. Arrogance is a liability. And in the digital age, speed is everything.